It's another Friday and another time for a tax update. So this week I had a specific request to talk about employing your children as part of your business or to do work for your business. Um, this is something that I get asked quite a bit, and there are just a couple of things that you have to take into account when you want to employ your children. So first, let's talk about the benefits. Children under the age of 18 um, get the same standard deduction as any other single person. So right now it's about $14,000. So you could potentially pay W-2 wages to a minor up to $14,000 completely tax free. So it would be an expense on the business, which if your business is a pass-through entity like an S corporation or a partnership or a sole proprietorship, then that would be a direct deduction at your tax bracket, say 25%, to a 0% tax bracket for your child. So it's a great way to save on income taxes. But there are some requirements and some risks associated with this. So the first thing is wages have three watchdogs. So the first one that we're all thinking about when we talk about taxes is the IRS. And actually, there's four watchdogs, really. So the first one's going to be the IRS. Obviously, the IRS is watching wages. They want to make sure wages are reasonable and fair. We will talk about that. The next watchdog, it's the Department of Labor. And then you have the Social Security Administration, and I'll give an example on that one. And then the final one would be your state taxes. So there's four different watchdogs that you have to watch out for. So because there's four different watchdogs, that means there's more scrutiny, higher chance of audit or an examination or whatever the Social Security Administration or Department of Labor calls it. Um, so there is higher likelihood of one of those watchdogs coming in and asking questions because there's more watchdogs. So that's one of the increased risks. Uh, Another increased risk is, or another risk associated with paying your children is um, you this is their money. So if they've earned it and you're paying it to them as wages, putting it on a W-2, then it is their earned income and you do have to pay them in some form. With that, you can pay them actual cash to cover it. You can put it into an investment account that is for them. A couple of different things that you can do there. However, it is their money, and the moment they turn 18, they have to receive it. So if they don't, and you don't have record of giving it to them over the term over the course that they've been working for you, is then you worry about or you have to be aware of um, that it was their money. So if you have an investment account for them, the moment they turn 18, it's their investment account. It doesn't matter if there's $1 million in there or 500,000 or whatever. If you've been paying them W-2 wages and you put it into an investment account, then the moment they turn 18, it is their account to do with as they see fit. That's where we end up with basically child actors turn 18 and they sue their parents because they made millions, and then when they turn 18, they realize the millions is no longer there. So that's another risk factor. When talking about the IRS with reasonable and fair comp, so that would be the IRS, Department of Labor, and Social Security Administration all watching that. You have to keep accurate time logs. So uh, you can't pay your child $100 an hour to shred paper. The work has to be appropriate for their age, and you have to pay them an appropriate, a reasonable rate for the type of work completed, and you have to keep accurate time logs. So, right now is uh, you basically keep a spreadsheet. And if today somebody was working for you, so today is December 26th, you'd put on the spreadsheet December 26th, Jason Jr. Shredded paper for 2 hours at $10 an hour, so made $20 and put time in there, so 10 to noon. So that's an appropriate time log. And so you have to keep accurate records because at any point, any of those watchdogs can walk in and ask for those records. Um, then the third thing that I want to bring up is uh, there is this idea that minors are not subject to Medicare and Social Security tax. So this is true if you are in a sole proprietorship. Basically, this stems back to farmers where children would help the farm. Um, so if your children are working on the family business, such as a farm, then they are not subject to Medicare and Social Security tax. However, that's only for sole proprietorships. If you have become a corporation, it is now not considered a family business anymore. It's a corporation. So if your child works for you, even though it's a corporation, technically their wages are still subject to Medicare and Social Security tax. So you would eliminate income tax on that $14,000. However, the rules say you're still required to pay Medicare and Social Security tax. So on $14,000, that would be $2,142 due in Medicare and Social Security tax. So just keep that in mind. Definitely talk to your tax advisor about that rule if you're going to run wages because appropriate forms have to be filed and the taxes have to be paid. Um, and then the last thing I just wanted to kind of point out is that this is actually watched by uh, the watchdogs, the IRS, Department of Labor, Social Security Administration, and state income or state taxes. Just as an example, I employed my children, probably around five, to actually help me shred paper. It was the first year that they had worked. I put it on a W-2, I filed it, and within a couple months I got a letter from the Social Security Administration wondering why a 5-year-old was employed. So they are watching, they are paying attention to it, and they do ask questions. Now, it was an easy response. I said it's a family-owned business. They're working for me, and it was resolved and there was no further questioning. So that is the nice thing about family-owned businesses is even though it's still a corporation, labor laws state that you can employ your children to work for you. There isn't a minimum working age requirement. So that is another benefit. So it is a great strategy to employ your children as a way to transfer money from your tax brackets down to their tax brackets, hopefully or most likely zero. And it's a great way to give your children or allow them to earn money. But you do have to make sure you watch out for those pitfalls, keep the appropriate documentation, uh, and talk to your tax advisor on best ways to implement that documentation, file the W-2s, and pay any payroll taxes that are due. Anyway, hope this is beneficial for everybody. Have a great weekend and see you next week.